Hi, and welcome again to another edition of Market Analysis for today, April 8th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets about 40 minutes prior to the U.S. session open. Well, the stock market is like a tightly coiled spring ready to burst into action with a strong rebound. Investors are just waiting for a sign. After the savage sell-off of last week, Monday was a day of wild swings. The S&P 500 rose as high as 3.4% and fell as low as 4.7% before closing down slightly, the widest intraday spread since March 2020. Now, the brief rally came after a false report that President Trump is considering a 90-day pause on reciprocal tariffs. The White House later described it as fake news. If nothing else, the market move highlighted the potential for a comeback should trade developments permit. But where might the catalyst come from? A deal between U.S. and China or negotiations of any sort seem a stretch now. Beijing vowed to fight to the end in a statement overnight after Trump threatened 50% tariffs on top of the 34% levies he announced last week. Now, that's a blow for the stock market. China's retaliation on Friday seemed to turbocharge the sell-off, and positive developments between the world's two largest economies could repair a significant chunk of the damage. However, if investors park that standoff for now, there are hopeful signs that deals can be reached elsewhere. Treasury Secretary Scott Bessent will lead negotiations with Japan after what he called a very constructive phone call between Trump and Prime Minister Ishiba. Now, the EU is also making encouraging noises. European Commission President Ursula said the bloc is ready to negotiate as has offered zero for zero tariffs, but Trump rejected that. So EU is preparing countermeasures. But it's a start. So all of this as the Wednesday deadline for reciprocal tariffs to take effect approaches, deals or even talks with major trading partners could kickstart a stock market comeback. With that being said, let's take a look at what we can come and speculate in market fluctuation. So here we have that wild swing in the NASDAQ. We see this wild swing across the assets, not all of the insects. So therefore, let's just look that slow swing. It came as low as almost hitting that level of support that we have placed yesterday, and then just came back and swung back up, rebounded very strongly, and just right past that 18,000 psychological round value of it, but it quickly retreated. And so therefore, but basically, it did close that gap that it opened with. Now today we have opened up with a small, tiny little gap up, but obviously the market seems to be recovering from such a tumultuous move from yesterday. So therefore, let's see if we can use the Fib extension. So this will be, let's measure from this low to that high to where we are, to where the market kind of is today. So check that out. So 0.382%, that will be the first target, and the second target would be that golden proportion. So that's where I'm going to place my level of resistance. So those are your targets right there, using the Fib extension, measuring that swing, that wild swing from yesterday. So that's the levels for resistance for the asset, and then for support, let's just do yesterday's close. Actually, yesterday's swing low, which will be here, and then the second level of support, a value, psychological value of 16,800. I mean, we could have chosen the yesterday's swing low as well, but I think that today is going to be a day where the market is going to try to recover some of that ground lost yesterday, actually from last week also. Then we have here the S&P. So therefore, let's use also the swing here and here, and let's just use those Fibonacci values to use as reference for our probable levels of resistance. Here we go. Now we have, I'm gonna use again yesterday's, the previous day's Friday swing low, and then 5,000 is just psychological value for it. Then we have the Dow. Let's do the same deal. Boom, boom, and basically here. All right, so let's use those Fibonacci values that we have, and then Friday swing low is just basically where the market has a swing low today. So no, let's use that 38,000 psychological round value right around there. And in this scenario, 37,000 is a pretty wide spread between those two, wide fluctuation. Then let's take a look at crude oil. So the world is trade imbalance and this and that. Could this actually affect our world's demand for crude oil? So if there's not that much of demand, then prices will most likely trend lower. $60 is that psychological value. Yesterday, the crude oil basically just touched both of my levels of resistance support that I had placed yesterday. You could go back to yesterday's video and see that this levels is where they were used. So today they were violated, they weren't broken because the market traded below them and came back and stayed in there. So I'm basically going to leave the same ones because we need to obviously see that they have been broken by closing above them or below them. So basically the same. I'm going to speculate that for crude oil, it's going to continue to be the same sideways trading for now until catalyst will come up and break it out of there. Then we have Nat Gas. So Nat Gas yesterday did a lower fluctuation. It did rebound off our level of support. So therefore, I'm going to have to, look, it violated it, but I'm just going to tie it to yesterday's swing low. As far as our resistance, 390 is going to be our first level, and $4 our second one, leaving the same level of support. So recovery today for the markets. Gold is actually finally being able to fluctuate above 3,000. And let's see if today we'll be able to close above 3,000. We still have that 20-day moving average, which is the medium in volume span as a dynamic resistance level for it. So let's see if that will be. Let's just tighten that up. I'm gonna use that for today, and then just 3080 as our second. So looking to buy gold. Let's see if that would be the case. Silver yesterday was the one that had more of a bid, so it fluctuated to the upside and it closed in green. So let's see today. Let's use 29.50 as a possible first level of support, and then just $29 flat out. I'm gonna leave the same levels of the first level of resistance and just use the 50-day moving average. Time that up to use that 50-day moving average. So looking to buy recovery mode today. Okay, so copper taking a beating. Well, it has been basically in the red for 1, 2, 3, 4, 5, 6, 7, 8, and now 9th sessions. Well, $4 seems to be that psychological support level for it. So let's see if it'll do the same today. But I'm actually gonna use that as my second level, and my first level is gonna be 410. I'm looking for copper to recuperate and rebound to the upside. Just fluctuate to the upside. Then Bitcoin seems to be also recovering. Yesterday it had also a pretty wild swing. So I'm just going to come on, get it down. There you go. All right, so then I'm gonna use 77,000 as my first level of support. And then that swing low from yesterday is my second one. As far as resistance goes, I'm going to use 82,000 right about there and just tighten up that 20-day moving average of the medium within the Bollinger Bands. So looking for a move, for a leg up. The currencies, the euro seems to be rebounding. Looking for a better movement on it. So let's see, 105. And then I'm gonna use 111 as a target, final target for today. Let's see if we'll be able to get to that point. Then we have the Great British Pound, which has, since Friday, with a big movement yesterday, opening up, gap down. Let's see if it'll be able to sustain itself and recuperate. Let's just bring that down to those levels. The 50-day moving average is acting right now as a dynamic resistance level for it. So let's see if that will be the case using levels of interest. Then the dollar index yesterday just had a nice recovery. It did fluctuate above. It was looking like making a triple top, which it would have been a reversal, but it didn't do so. It just could it be doing a head fake right now? It could be the case, but let's just see. So 103.5 is going to be the resistance. It did open gap up. It has been closed. So let's see what will happen with the dollar index. That's it for me today. Have a great trading day, and I'll see you tomorrow.